one of the largest companies in the world, one of the most stable stocks in the stock market, and one of the best performing stocks in the stock market as well. Today we're going to be talking about Microsoft. We're going to be doing a deep dive analysis on Microsoft. So if you like this kind of video, make sure to drop a huge like down below. Let's get 100 likes on this video. And for a fun experiment, comment down below if you're bearish, bullish, or neutral on Microsoft, and if you're a current shareholder in the stock as well. So I did have a poll up in my Facebook group that's completely free, link in the description if you want to join. And I asked you guys what stock you want to see a deep dive on next, and the winner from that vote was Microsoft, which is why we're going to be covering that today. So first, let's start off with a company overview. A lot of you know Microsoft, but you might not know all of the services that they offer and the different segments that they're in. Let's walk through that to give you a better understanding of just how large this company really is. So Microsoft is traded under ticker symbol MSFT and is currently the third largest market cap company in the world at just under $875 billion. So they've traditionally been a software company where products like Microsoft Windows, Microsoft Office Suite, which you all have used at some point, Internet Explorer, which a lot have grown up on. But over the years, they've kind of branched out into some other hardware aspects with things like the Xbox console and the Surface laptops. They're also owners in companies they've acquired over the years. One of the biggest ones, LinkedIn, which is a popular social media platform for professionals or for businesses. Microsoft proudly holds the title of the largest software maker by revenue in the world. Now, what I personally love about Microsoft is that over the years, they've implemented a successful strategy to convert into a subscription services company. And this includes subscriptions for their popular products like Office, which has helped recharge their growth in this segment. One of their biggest growth drivers ever since the new CEO in 2014 took over has been in the cloud space with their Azure platform. Now, Azure brought Microsoft back to its roots, in my opinion, where its focus, growth, and future prospects is once again focused on software. And that has shown significantly in the growth numbers of Azure, who is only number 2 to Amazon's AWS. So here's a fun fact. Currently, Azure holds about 30% of the total cloud market, where AWS holds just over 40%. So they are closing in. And Google, of course, comes in at third place with a measly 3%. It's not really a significant threat here to Azure. But based on these stats, it's pretty clear that Microsoft is going after AWS, and they are bridging the gap after every quarter that goes by. So they do have potential to either catch up or even surpass AWS in the near future. Now, I think it's important to actually take a look at some of their numbers from the last earnings report to see how their different segments are growing. So here's a closer look at their growth, and it's kind of broken down into their Windows, gaming, devices, and search, different segments that they're in. So some highlights from this really is that for Windows, the commercial products and cloud services revenue grew 23%. Devices had a surge of around 25% with the Surface. Gaming revenue increased by 39% with the Xbox platform, and their search revenue actually went up 17%. If you're not familiar, Microsoft actually owns the Bing platform as well. So as you can see, strong growth across the board, double-digit growth for everything across the board. Gaming actually surprised me with its 39% growth personally, and I think that's going to be a big driver for them moving forward as well. So since Microsoft is actually diversified and competes in many different segments, it has many different competitors that are some of the largest companies out there. So in the operating system segment, they compete mainly with Apple with their Mac OS platform. In the gaming segment, they compete with Sony and Nintendo. And in the cloud segment, like we talked about, they compete mainly with Amazon's AWS. So as a result, they have to consistently and constantly continue innovating on all these segments. And I personally believe that they're doing this successfully. They have shown the competition that they will adapt when necessary to continue their growth, and as we saw in the previous slide, they are growing in double digits. So if I was one of Microsoft's competitors, I would be threatened by these numbers. Now, looking at what analysts have to say here, of course, they're brought to us by tipranks.com. You sign up for free to look up your analyst ratings or stock analysis or stock research for any of your favorite stocks. Link will be in the description down below. Now, over the last 3 months, Microsoft has had 21 analysts come out as bullish, 1 came out as neutral, and 1 came out as bearish. The average sentiment, the average price target here is around $121.81, which gives us a rough 10% upside from the current prices. So even though Microsoft is already so large, there's still a lot of upside here that analysts see in the stock. The technicals, of course, something we need to look at, especially after the correction over the last week. Microsoft has had a healthy chart from a technical standpoint, although it did experience a correction, like I said, where the overall market experienced one last week. However, it didn't drop as much as some of the other tech stocks, and we did hold above the 200-day moving average. In fact, we didn't even come really close to that, which sits currently at around $100 per share. And as of right now, we did bounce off the 100-day moving average. We did break past the 50-day moving average, which is a bullish sign here. And our next stop will be breaking past the 20-day moving average to continue our uptrend here. The next catalyst really for Microsoft that I can see will be their earnings report, which is scheduled for later October. However, they will be influenced by the overall earnings season from tech. So if large tech companies move higher, Microsoft most likely move higher with it, even though they are reporting later on. Likewise, if overall tech companies move lower, Microsoft will most likely move lower as well. So I just want to leave a disclaimer here that this earnings season will be pretty volatile in my opinion. We could see the stock move up to $120 after earnings, or maybe even move down as low as $100 after earnings, depending on how numbers turn out and if investors are happy with the results. That being said though, I would say the sentiment is still very bullish on Microsoft, and the buy the dip mentality is still very strong in this stock. So looking at some fundamentals here, I also threw in some charts here, which I pulled from TipRanks as well. So Microsoft has a current PE of around 27.63 and a forward PE of around 21.82. So fairly valued company considering its growth and its size. And in my opinion, even though the current PE is close to 30, the forward PE is at a very, very reasonable ratio. So it's something that I would actually consider more of a value play than necessarily a growth play. On top of this, Microsoft also does pay out a dividend, which yields around 1.71% currently. And it's a handsome amount in my opinion, considering the growth that Microsoft has. Even though it is a value company, it still has a little bit of growth ahead of it. It's still growing double digits like we saw. So it's kind of a company where you get that stability, you get that value, but you also get a little bit of extra bonuses like dividends and the potential growth. As we can see on the charts here on the left, the dividend yield range has been decreasing, and that's because the stock price has been increasing significantly. So you are still getting a decent value. I mean, a few years ago it was almost a 4% yield, but since the stock price has gone up so fast, now we're sitting at below 2%. The PE ratio has also been increasing. 2016, for example, was sitting at around 25 or so, whereas now we're closer to 30. This, of course, is expected as the stock market continues with its bull market, and it's good to kind of exercise caution on these kind of stocks, wait for corrections like we just did, because those provide us good values to get in at more reasonable prices. Now, looking at the balance sheet here for Microsoft, we can see the cash and investments sit at around $135 billion, but debt sits at around $165 billion. So the cash to debt ratio actually comes in at 0.8198. So although they have quite a bit of cash on hand, they also have quite a bit of liabilities on hand, which in my opinion is a bit concerning because they have a ratio less than 1, and if you know my investment, I like to look at ratios of 2 or above typically. However, with their rapidly growing segments like Azure, and like we saw in their gaming platform, as well as their subscription service with things like Office, I think that their debt will reduce significantly over the next few years, and they're actually going to be a very profitable and a very lucrative company to invest in. Now, looking at the numbers and growths year over year for the last few years, we can see that the revenue has been increasing substantially, and the operating income has been increasing with that as well. The net income, however, was down for the last year, and that's because we did have a one-time tax hit of around $14 billion, which skewed the results for last year, so I wouldn't necessarily take that too seriously. Look at the couple years before that, we had significant net income growth at 68% and 24%, but nothing too concerning there. We'll have to wait and see how this upcoming year is doing, and as it looks right now, it's growing pretty nicely. One thing that did concern me though is that capital spending is increasing substantially, but I believe that Microsoft does know what they're doing and they are making the proper investments here to actually continue the growth in the different segments that they're competing in. Now finally, if you look at the bottom, the stock performance, this has been a consistent green grower throughout. The last 4 years, last 5 years, it's been consistently going up year over year, double digits year over year. And over the last couple of years specifically, it's actually been ramping up. It's been going up 37%. And if we look at the stock performance in the last 5 years, you can see we went from like $46 to now $100 something. And this actually shows us that the stock actually had triple-digit gains in percentage over the last few years. So a very, very strong performing stock right here. Now for a visual, just to help you understand this growth better, you can see that revenues actually started picking up substantially over the last year, and that, like I said, is driven mainly by their growth in Azure. The stock performance is growing quicker than the revenue and profits. However, investors are excited to see if Azure can potentially overtake AWS as the #1 cloud provider in the next few years. And I think that's kind of the catalyst that keeps pushing the stock higher and higher. Now, if there is some fault or there is some doubt in Azure that comes out, I think that'll significantly affect the stock price for Microsoft. But as it stands right now, I think they're at a pretty healthy level. So let's kind of sum up everything that we've learned about this stock here, and let's figure out if this is a buy or a hold or a sell. So Microsoft has really proven why it's the 3rd largest company in the world by market cap, and it's posted phenomenal growth in all of its segments in the recent years. They are pretty much full steam ahead when it comes to Azure, which is their main profit driver currently, and which is actually the main thing that investors are looking at currently. Other services of theirs like Office, Xbox Live, LinkedIn Premium, and other recurring payment systems have also helped contribute to this growth and this revenue and the profits, and have been a consistent stream of money for them and growth for them over the last few months and the last few years. Now, they have a lot of strength behind the brand. They also prove year after year that they can drive growth and bring in profits in their core businesses, like their Windows platform, for example. The stock performance has been absolutely outstanding and has posted incredible profits over the last few years, all while paying a reasonable dividend throughout this time as well. So investors are kind of getting a good deal on both ends of this, with some growth, some value, and some dividends. So overall, in my opinion, Microsoft has proven that they are a force to be reckoned with, especially when it comes to cloud. Now, the growth numbers we went through speak for themselves in my opinion, and as a result, I would consider Microsoft a buy at its current prices. So Microsoft is a stock that I've been watching for quite a while. I do have a swing trade position with call options in Microsoft currently. If you want to see the trades that I make, I do post them in my VIP group as soon as I make them. You can see my cost basis, the options or shares that I buy, and exactly when I buy them, along with my overall portfolio. So if you're interested in that group, check out the link description below. Either way, guys, I hope you enjoyed this deep dive. Comment down below again if you're bullish, bearish, or neutral on Microsoft. Kind of curious to see what the overall sentiment is here with my viewers. But either way, hope you gained something out of this video. Hope this was valuable to you. Don't forget to invest positively, and I'll see you in the next one. Peace.